Hello, everyone. Welcome to this week's weekly market view for Monday, the 22nd of January to Friday, the 26th of January, 2024. My name is Vishal. Let's get started. All right, let's start with the Nifty analysis for the week. Let's start off with the monthly chart. So, this month has started off on a bearish note. You can see this candle over here. And usually, if you look at all the months of the year when the markets are, starting off the year, January month has always been a bit of a negative month for the indices. Let's look at, yeah, this is going to be the key level over here. So I'm just going to mark it wick to wick. Yeah, so 20,211, 18,866 on the monthly chart. Let's look at the weekly. So today we had a pretty strong opening. However, the markets did not sustain the strong opening, and now we are seeing a little bit of a move to the downside. And as you can see over here, we are seeing this rally base drop formation, potentially a weekly supply in creation, not yet formed. And obviously, that will get more activated once the low of this candle breaks. The low of this candle hasn't yet broken. And if you look at the demand zone over here, then this is going to be your key level of demand, which is this rally base rally 19,875 to 19,673. If we move on to the daily chart, on the daily chart, we are, let me just get rid of this. We are more or less seeing a very, very strong bearish candle today after the market opened. So market did gap up and then was unable to sustain and then is moving further down. Now, what is going to be a key area to watch out for is this support. If this support tends to hold, then we might move again back into a consolidation. On the daily chart now, we do have this supply zone here, which is going to be a key level, at least. And yes, this support level is going to be very, very important. So which means that if market does break the support level, then we might start moving towards this gap area over here. So this is going to be another key area to watch out for. 21,000 also being a round number is going to be a crucial area. So right now we are bang on more or less in the middle and moving closer to this lower level of demand. And we'll have to see in the coming days whether the market remains more bearish and market tends to correct a little bit more, or then it just consolidates between the levels of demand and supply. Let's move on to the Bank Nifty. So Bank Nifty is uh, Bank Nifty is one of the most weakest indices, to say so. And if you look over here very closely on the monthly chart, this is your monthly level of demand after breaking the highs. So this is going to be a key level to watch out for, 44,631 to 42,214. And then on the weekly chart, we have this key level over here, which was also discussed last week. So markets are coming closer to that level now. So we have to be a little patient and wait and watch to see what happens. 44,400 is going to be the key level. Just mark this level over here. Yeah, 44,400 to 43,246 going to be a key level on the Bank Nifty. And a lot of times, a lot of people ask me this question that, when the market is falling down, do we need to look at 5, 10, 15-minute levels? And I think it's more important to have a look at what the higher time frame levels are doing, especially on a day where Nifty is nearly 230 points down, Bank Nifty is 1,000 points down from the highs, financial services 350 points down. So I mean, when you see this entire these big numbers on your market watch screen, it makes more sense to look at higher time frame levels. So if you go on to the daily chart, we do see one key level, which is this rally base rally level of demand, and maybe the market might take a little bit of a pause over here at around 44,800 levels. Now obviously we are coming to the round number, which is 45,000, and we might even tend to see that level also holding. So 44,927, 44,198 level will be a key level to watch out for on Bank Nifty. We might tend to even get a pretty strong bounce from this level, but Let us see if we happen to see that. And on the supply zone front, we are seeing these clear levels of supply right now. Okay, so 48,205, 48,607. This is going to be a tough task now for the Bank Nifty to break. As long as this level holds, then we might still have a glimmer of hope that this level might get taken out. But first, this level needs to play out, and if this level then breaks, then we might even head further down. Okay, but let's see how this level plays out for this week. So yeah, this is your daily level 44,927, 198 to 48,205, 48,607. All right, let's move on to the next index. We are going to have a look at the financial services, which is the Finnifty. And let's quickly load the Finnifty chart. All right, and now if we look at the Finnifty, let's remove all the tools here. And let's do the analysis from scratch. So Finnifty is more or less behaving like Bank Nifty as of now. This is your key level of demand, 19,964 to 18,875. So we had a good move to the upside, but now we are seeing a little bit of a retracement coming in. If we move on to the weekly chart, then this is going to be your key level on the weekly, which is this base rally level of demand. So sooner or later, these indices are coming to higher time frame weekly zones. So we got to be a little careful. And once these levels are hit, then you want to avoid shorting on the indices. 19,844 to 19,397 on the weekly charts. If you go into the daily chart, just before this entire weekly level, we do have this one more level of demand, which is this rally base rally. And markets might tend to give a little bit of a pause here since they've already corrected pretty strongly to 20,089 to 19,905 is going to be a key level to watch out for on the Nifty Financial Services. Let's move on to the next index, which is the Mid Cap Nifty. So we had a very strong opening on the Mid Cap Nifty today. We had a pretty strong move to the upside, but then we had a strong drop as well. Okay. So let me just check this. Script. Okay, we'll just load the futures chart here and we'll do the analysis on the futures chart. Since the spot chart is giving a few issues, we'll just do the analysis on the futures chart. So let's load the futures chart for the mid cap index. And let's start off with the monthly chart first. So seems like based on all the indices, the Nifty mid cap seems to be the strongest index, right? So it's still holding some key levels. Of course, the monthly chart is showing some bearishness, also the weekly chart. But looking at all the other indices, Nifty mid cap is still showing a lot of strength. Now we do have some key levels of demand which are a little further away from current market price. So we have this base rally on the weekly. So let's mark this level 9,551 to 9,422, which means that if the mid cap index corrects, then it has a lot of room to correct to the downside. All right. If you go on to the daily chart, we have been taking a little bit of support at all these daily levels. Market is forming higher highs. So any kind of move to the downside will just be a retracement. And then you have another level, which is this base rally, 9694 to 9588 on the daily chart. So this is your base rally on the Nifty, on the mid cap Nifty daily chart, 9694 to 9588. No supply zone yet, so I'm not marking any zones. All right, let's move on to the next market here. We are going to go look at the USD INR, and let's quickly have a look at the USD INR. All right, let's have a look. Perfect. Let's start off with the monthly chart. So we'll remove all the tools and we'll start the analysis from scratch. So monthly chart after consolidating is just showing a little bit of tiredness on the weekly. USD INR is moving up again. So we might head towards these areas over here, which is going to be another test of the weekly supply zone, 83.25 to 83.43. The closest weekly demand zone on the USD INR is this drop base rally. Markets have not yet come here, 82.71 to 83.35. And then we have another level of demand at the bottom here. If we look at the daily chart, on the daily chart, we see a clear level of supply, this rally based drop. So markets are going to find it a little bit of a challenge to break this level first before it moves up. Although markets are showing a little bit of strength on the USD INR, any strength on the USD INR is going to probably create a little bit of weakness for the indices. So keep a close watch. So market held on to this level. And in case if the USD INR pushes towards 83.24, 83.35 odd levels, then we might tend to see a little bit of negativity in the overall indices. All right, let's move on to let's be a little bit more stock specific now. Let's look at the heavyweights. So let's look at Reliance Industries and let us see what Reliance Industries is doing on the higher time frame chart. So Reliance Industries recently announced its earnings, and thereafter the monthly chart, if you look at 27.94 to 28.58. So we had identified this level on the daily chart. We'll just quickly go there once. Yeah. So markets did come into this level 27.94, 28.58. And if I remember, I had mentioned that probably it's not a good idea to buy Reliance at these levels. Now markets can correct and come down strongly. So if you look at, let's load the, yeah, this is the daily chart, but just want to load the 240 minutes chart just to check if there is any level over here that probably could be interesting. So if you look closely, markets have broken some key levels. Now these are going to be some supply zones, which is not great news because markets are also creating lower highs. Now we are seeing a little bit of a bounce coming in Reliance, and possibly this is because of this gap level over here. So we might tend to see a little bit of a pause in terms of the market falling down in case if this level holds and then again begins to rally to the upside. But the clear level of demand is way below over here. Again, too much of trading to the left. But since this has been a very, very strong move to the upside, this 2600, 2575 level would be acting potentially as a strong support for Reliance. Now let's look at the Bank Nifty heavyweight. So let's go to HDFC Bank. And more or less, HDFC Bank very clearly has been playing a spoil sport on the Bank Nifty because that is the one that is actually dragging the Bank Nifty completely, right? So nearly from 723, 25, 30 odd levels after the earnings, it's just been a disappointment. All right. So now let's start off with the monthly chart first. So on the monthly chart, we are in or heading towards this key level of demand here, not too far away. This is, we are at 1438. And right now we are just coming into this 1400 odd level. If you go into the weekly chart and yeah, so pretty much we are in a weekly level of demand right now. Not a great quality level of demand, but it's a higher time frame level, which means that the markets can take a little bit of a pause over here and then start turning again to the upside. So 1437 to 1364. And if you go on to the daily chart, yeah, so on the daily, we have this level situated right here, which is this gap level. So it'll be interesting to see that as the markets are coming closer to this gap level, they are giving a little bit of a stronger reaction. All right. So that all now depends on how HDFC Bank moves. If it starts moving further down, then we might see Bank Nifty heading towards the round figure, which is going to be 45,000. Not very far away right now. It's already at 44, 45,075 odd levels. But yeah, the 45,000 level could be tested today. All right. So, pretty much this is it from me for this week. I hope you enjoyed the analysis. Wishing you all a very happy Republic Day in advance. 26th is a market holiday. So, do enjoy your holiday with your family and your loved ones. And if you do like our channel, please do subscribe to our channel. And please do mention and give your valuable comments in the comment section. Thank you so much, everyone. Goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.